Good morning. Welcome to our YouTube channel, accountingiseasyph.com. I am your coach for today. I am Coach Becca, and my task is to define what is accounting all about. Our objectives for today are the following. First, what is accounting? Second, what is the purpose of accounting? Third, what are the accounting principles? So, what is accounting? Accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character and interpreting the results thereof. So remember, it's an art of recording, classifying, and summarizing. And it will only summarize those transactions and events which are financial in character. And of course, you will interpret the results. So what is the purpose of accounting? The purpose of accounting really is to make decisions in the future. So usually accounting is an art of recording transactions. So if you're a businessman and you go to business or you proceed to business, your main goal there is to gain profits. So how would you know if you are profitable or not? Through the use of accounting, you can identify whether your business have profit or loss. So the purpose of accounting is to accumulate and report on financial information about the performance, the financial positions, and cash flow of the business. So we know that we have several users of financial accounting. So our users, we have the managers, the owners, the employees, the customers, the suppliers, the lenders, the banks, the government, and even the public. So again, it is for decision making. So for example, for the owners or investors, they would like to know, it will help them, no? They would like to know whether their investment, they held or they sell or they buy, whether they are profitable or they are successful. So business owners need financial information to determine if the business is profitable and whether to continue or improve or drop the business. For the manager, they want to know, the manager includes the owners, so especially in huge organization, and we have also the managers who are interested now with the responsibility of operating the business. So the managers, whether owners or hired, they really face economic decisions. So, example, how much supplies will they purchase, how much cash do they have, how much they make last year, or they are getting the targets. So this accounting, through accounting or through the financial reports, they can determine whether they meet the target or not. For the lenders, they want to know, especially the banks and other financial institutions, they want to know if the companies have the ability to pay their liabilities when it comes to maturity. So they want to know whether they are liquid or they are solvent. For the creditors or suppliers, they are interested on the company's ability to pay on their obligation when they become due. So they look on the liquidity of the company. For the government, they want to know whether the company pay the correct tax and of course regulatory purposes. For the employees, they would like also to know whether the company is stable and profitable so that the company can pay their salaries and can provide their benefits. For the customer, it would be in a long term, especially on contracts, whether they are dependent on the product of the company. So they want to know whether the company is stable and can sustain on its operation. And the last is for general public. They are interested in the financial statement for some reason, so maybe for research or for other analyses. So again, the main purpose here is for decision making. So for the business owner, it will help you plan your growth. It will, of course, essential for securing a loan, and it can help you pay the right amount of taxes as what I discussed a while ago. So you use the past transaction to take action on the present, and of course, through accounting, you can change the future. Okay, now let us discuss or differentiate accounting and bookkeeping. Usually, accounting and bookkeeping overlap in many ways. Some say bookkeeping is one aspect of accounting. But if you want to break them apart, you could say that bookkeeping is how you record and categorize your financial transaction, whereas accounting is putting that financial data to good use through analysis, strategy, and tax planning. Okay, so we have here financial statement. So we know that accounting is a language of business. Without accounting, you cannot analyze your business, whether profitable or not. So you can analyze your business through financial statements. So we have 5 types of financial statements: the income statement, the balance sheet, the statement of cash flows, the statement of changes in equity, and the notes to financial statements. So the income statement is the reports on the financial performance of the business. So here you can identify whether there is profit or there is a loss in that particular period. For balance sheet, you can identify how much is the asset, the liability of the company, the owner's equity. There you can identify on the balance sheet. Statement of cash flow, you can look on the cash in and cash flow and cash outflow of the business. While statement of changes in equity, you can identify here the results of the equity of the business. Either they have withdrawals or they have some investment on their equity. And notes to the financial statement, here the list of the other list, other informations that cannot be put on the income statement, balance sheet, statement of cash flow, and statement of changes equity, like the their accounting principles, the methods they are using. So you will put that in the notes to financial statements. In accounting, we follow the basic accounting principles, and we also call these as generally accepted accounting principles. When we say principles, these are the rules and guidelines followed by the different entities to record, to prepare, and to present the financial statements of the company for presenting the true and fair picture of those financial statements. So what are these accounting principles? So we have 6 accounting principles. First one is the accounting principles. Here, we only record those we only record income when they are earned, and we also record expenses when they are incurred, regardless of cash flows. Second principle is the consistency principle. As per this accounting principle, you should follow or you should use the same accounting method consistently from period to period. So for example, if you are using straight line as your depreciation, you will use this in the next period. The third principle is conservatism principle. There is a saying that says, do not count the eggs while they are not yet hatched. So this is the reason why accountants will not recognize gains unless they are realized. So conservatism principle encourage the accountants to report more significant liability amount, lesser asset amount, and also a lower amount of net profits. The fourth principle is going concern principle. Here, a company would go on operating for as long as it can in the near or foreseeable future. So, the going concern principle also a reason why the company may defer its depreciation or similar expenses for the next period of time, since we assume that the business will continue for several years. The next principle, the fifth one, is the matching principle. So the matching principle is the basis of the accrual principle. Since here you will match or you will recognize and records revenue, it will match on the costs and expenses related to it. The sixth principle, the last one, is the full disclosure principle. Here, a company should disclose all financial information to help the readers see the company transparently. Without the full disclosure principle, the investors may misread the financial statements because they may not have all the information available with them to make a sound judgment. In accounting, we follow these assumptions. So we have the acronym of TAGAM. TAGAM. So T is for time period, A for accounting entity, G for going concern, A for accrual, and M for monetary unit. So we assume that our time period of accounting is for 12 months or equivalent to 1 year. So we record our transactions for 1 year. Next is accounting entity. Here, we separate our personal transactions with our business transactions. We will only record those transactions that is related to business, meaning our business have a separate entity distinct to its owner. Next assumption is going concern. We assume that the business will continue, will exist for how many years? Next is accrual. We only recognize income when it is earned and recognize expense when it is incurred, regardless of cash received or cash disbursed. The last one is monetary unit. We assume that our Philippine peso is stable. So in summary, what is accounting? Accounting is the language of business in the form of financial statements. What is the purpose of accounting? Accounting helps users in their future decisions. And then, accounting must follow the accounting principles to make it more reliable in deciding for the future. Thank you guys for viewing, and please don't forget to subscribe our YouTube channel. So see you next in our next video.